Welcome to Crypto Flywheel, a podcast where we spin up strategies to turn your digital efforts into unstoppable momentum. Now, so I want to talk to you about something that happened yesterday, April 9th, 2026, that I think is the most important stories in crypto right now. And look, I'm going to break this down as simple as I possibly can, because on the surface it sounds complicated, but once you see what's actually happening here, you're going to be like, wait, that really did that? All right, let's get it. So first, who's World Liberty Financial? It's a crypto project co-founded by the Trump family. Yes, that Trump family. It has its own governance token called WLFI and its own stablecoin called USD1. Now, a governance token, just so we're on the same page, is basically a coin that gives you voting rights inside that project. So it's not like Bitcoin or Ethereum where millions of people are out there buying and selling it all day. WLFI is thinly traded. It doesn't have a ton of liquidity. Now, guys, that detail matters a lot in a few minutes. So here's what happened. WLFI took approximately 5 billion of their own WLFI tokens, nominally valued at around $440 to $460 million, and deposited them as a collateral into a lending protocol called Dolomite. Now, in DeFi, lending protocols work kind of like a pawn shop. You bring something valuable, you put it up as collateral, and the protocol lets you borrow cash against it. You keep the loan as long as the collateral holds its value. So WLFI put up their tokens and borrowed approximately 75 million in stablecoins, 65.4 million in their own USD1 stablecoin, and $10.3 million in USDC. And then, this is where it gets interesting. More than 40 million of that moved into Coinbase Prime wallets, suggesting fiat conversion or over-the-counter activity. So to recap, they printed tokens, used those tokens as collateral, borrowed real dollars in the form of stablecoins, and then sent 10 millions to what looks like a cash-out destination. That's a move. Now here's where it gets uncomfortable. Who co-founded Dolomite, the lending protocol where all of this happened? Person named Corey Kaplan. And Corey Kaplan also serves as an advisor to World Liberty Financial. So let me paint that picture clearly. The borrower and the platform they're borrowing from share the same inner circle. In traditional finance, like if a bank CEO went to a bank and he also advises and took out a $75 million loan against assets he controls, that would typically require disclosure and independent board approval. In DeFi, there are basically no guardrails like that, and it goes even deeper. LFI now sits at the top of Dolomite's applied asset list. Roughly 55% of the protocol's entire $835 million total. One entity borrowing from a protocol they're connected to, and they are the protocol in terms of size. That's not normal. Now, here's the part that affects everyday people who have money sitting in Dolomite. When you lend stablecoins on DeFi protocols, you expect to be able to get your money back when you want it. But there's a thing called the utilization rate. And that number tells you how much of the available liquidity is already borrowed out. Dolomite's USD1 pool is sitting at about 93% utilization, meaning most of the liquidity is already borrowed. And the majority of that borrowing, well, it's the WLFI position. So if you're a regular depositor and you go to withdraw your stablecoins right now, you might find that you just can't. Not easily, not quickly. The pool is essentially drained. And it gets worse. If WLFI's price drops sharply and triggers liquidation, analysts say that the position is basically unliquidatable without major losses for lenders. Because remember, WLFI doesn't trade with a ton of volume. There's no deep market to sell 5 billion tokens into. So if a forced sale happens, the price craters, the collateral becomes worthless, and the regular depositors are the ones left holding that bag. Now I want to flag one more thing that people are talking about. The $40 million transferred to Coinbase Prime reportedly happened hours ahead of Trump-linked geopolitical announcements. So WLFI hasn't addressed that timely directly. The team says everything is fine. They call the concern FUD, fear, uncertainty, and doubt. They say they're nowhere near liquidation and that if the markets moved against them, they'd simply supply more collateral. But think about that response. Their answer to the risk is, well, we'll just deposit more of our own tokens. More of the same tokens that just dropped 12% in one day after this story broke. So let's zoom out here for a second. What you have here is a closed loop. The same group of people created the token. They control the platform. They use the tokens as collateral on the platform. They borrowed real stablecoins against it. They sent tens of millions towards what looks like a cash exit. And regular depositors are now sitting in that same pool that's 93% drained with limited ability to get out. The token itself has lost over 75% of its value since its peak. WLFI's own treasury buybacks, $65 million worth, are now underwater by roughly 48%. So let me ask you, is this illegal? That's for the regulators to determine. But it is a perfect example of why people look at DeFi projects and say, this isn't decentralized finance. This is just regular finance with the same conflicts of interest, but without any of the rules. Look, I'm not here to tell you what to think. I'm here to show you what's happening on chain so you can make informed decisions. The blockchain is public. Everything I just walked you through can verify it yourself on Arkham, on Etherscan. So if you found this helpful, drop a like. Share it with someone who's in crypto because this kind of thing affects everyone in this space.
Well, that's an interesting take, Digital X. And know that this was something that's happened recently. We are trying to inform our listeners here, but this is just like a chat, right? Between you and me, our conversation. This is passion, what we like to do, and we're tracking it. And listeners will tend to follow us because there's no hype here. But think about what you just shared is WLFI, Donald J. Trump, Corey Kaplan, Dolomite, all of this stuff is happening. But is it really something that is, is it really shady? Is it really something that is illegal? In my opinion, I think it's fine as long as investors are informed. I mean, if they're following, you're going to invest, you're going to have to do due diligence, right? You're not going to go in and participate in the WLFI stuff or Dolomite if you feel like there's something, something shady that's happening, So in my opinion, I think that this is something that, yes, Donald J. Trump is involved behind the scenes, if you will. What does that have to do, in my opinion, what does that have to do with the ISO 222 ecosystem? I think what we're trying to share is, I'm trying to be a devil's advocate here because I'm for digital assets, right? And the evolution of the cryptocurrency or digital asset space. But there are going to be people setting up stuff along with it, trying to be within the norms of rules and regulations. What people can misconstrue or have a thorough understanding of what's going on and position themselves. That's my take on it, Digital X. What do you say?
Man, I am shocked that you're fine with this because I'm totally not.
Well,
I find it to be very not transparent in what WLFI has done. They had it's basically a Ponzi scheme where they're able to create tokens, pull out the money out of it, hype it up to other investors, especially when you're head of a country or you're in leadership positions and you have that ability to sway people's minds and put them at ease and say, hey, this is legit project, invest into it or advertise it as such. You hold the highest office in the land and then you do this to individuals. That's very shady. I don't see this any different from the FTX debacle that happened a few years back. I think this is, the only way and the only reason why people are able to see this because it's on blockchain. So the transparency is forced transparency, which this administration, I don't want to get political. I'm not for any parties, but right is right and wrong is wrong. I don't condone this. Believe this is very scandalous. This is bad for the industry in terms of, look, regulations are trying to be worked out. It has to be a bipartisan, effort. This guy is basically messing up the whole industry because for his own selfish interest and intent. He puts in all these individuals into his administration. They're robbing from people left and right. I remember before his election, he brought out the Trump coin. That's a bad move. Then he brought out the Melania coin a week or 2 weeks later. But drove up the price, pulled out the liquidity. My God, I mean, you see this happening from this person. So I do see it as a very selfish move on their part. That's my take on it. And I feel bad for the investors because they've been duped into this shit, just like before the election. I mean, it's a total 180. So,
yeah.
I don't agree with this at all. I mean, if you're going to rob from people, man, it's a wrong thing to do. Yeah. It doesn't matter which area you're in. If you're the securities market, if you're in the commodities market, if you're in the freaking crypto market, I mean, it doesn't matter. Robbing is it's something. It's not right.
Fair enough. But here's the thing: what is different, Digital X, from centuries and centuries of this happening from leadership, right? What he's doing right now, he is participating and promoting cryptocurrency, and we want to be dominant. At the same time, make no mistake, he is also trying to prevent BRICS nations of de-dollarizing the dollar. So now we're talking also about the ISO stuff that's happening behind the scene, right? And that is actually building trust within banking systems as well. Now you got to weigh your options. He's doing this, he's doing that. Whatever the case is, it's still promoting what I want to talk about essentially is the control grid. Now, we can go into that in subsequent episodes, but I'm thinking this is ultimately a control mechanism that's going in with regulations being laid down in architecturally.
Yeah, he's not helping regulations. He's hurting it. Because
no, I mean, like the Biden administration, the previous administration didn't do anything for this space.
Well, I understand that. We're not looking backwards. We're looking forwards. He's not doing anything to benefit it going forwards. They're pushing the can down they're kicking the can down the road. Man, how do you figure if you're trying to help this new asset class with guidelines and protocols and banks and institutions to have faith and safety and investing into it, you can't pull shit like this. It doesn't work. And especially if you're head of a country and you're a leadership, you have to have restrictions in what you do. You can't do illegal activities or even attempt to do.
Okay, fair enough, Digital X. I'm telling you, this industry, what we're talking about is, let's think about it. Our show's name is the Crypto Flywheel. Right? The crypto flywheel moment here is that this is unprecedented and it is actually taken out the unstoppable momentum of this space, right? Now, this man is undoubtedly taking advantage of a unclear, unprecedented asset class. You mentioned that he is the leader. Yes, that is a primary point. The secondary point is here that there is no clarity. He's not breaking any laws because there were none to begin with. He is actually put in the Genius Act.
What do you mean there's no clarity? He's
the one who introduced it, right? The Genius Act for stablecoins and all of that stuff.
It doesn't matter. Listen, crypto was here before he was here, and he'll be here after he's here. So he's not the originator or creator of this asset class. He can't come in and say, hey, this is how shit's going to be. No, there's there's legislators, there's Congress, there's, the Senate, and they write laws for certain industries. And you're telling me he's coming in and he's able to do that without them? I mean, he's inhibiting what they're able to do with all the shit that he's causing right now. Let me tell you something. Let me tell you another thing. It doesn't matter what he does or what he says. BRICS is going to move forward without him. So he has no say in what BRICS does. All right. So I'm just saying his activity and his way of doing things, he's harming the industry more than helping. Even though he signed or he passed the Genius Act, it doesn't matter what he passes or not. The industry is going to move forward, but what's happening with him is he's holding it back. He says he's progressing it, he's not. He's holding it back with crap like this. What he's doing, this is my take.
No, I agree with you on many of those points. Look, what he's doing, like you said, doesn't matter. It's going to happen whether he's here or whether he's not. He did introduce a lot of this stuff, a lot of these legislations. However, he also put in those people to make sure that it progresses. He leveraged all of those pro-crypto congressmen and women, as well as he also through other channels, if you will, he set himself up to succeed. And his
Let's take that back. He didn't set himself up to succeed. He set himself up to steal. That's what he's basically doing.
Well, he's not doing it illegally.
Dude, it's stealing there is no legal way of stealing. It's stealing or not.
What do you think the entire stock market is?
We're not talking about this. That's the other financial system. Yeah, but we're talking about the crypto industry. This is a new asset class, right? And you're supposed to set rules and regulations for this industry. What he's doing is he's holding it back because of the shit he's doing right now. So he's stealing, man. There's no right way of stealing.
Yeah,
if you're stealing, you're stealing.
Look, I'm not disagreeing with that part. I really am not. But if you think about the banking industry as a whole, the finance space as a whole,
we agree on that, but we're not talking about traditional. Traditional is corrupt. Yes, I agree. They made rules for them, that legal way of corruption or hidden corruption. But this is a new asset class, and he's holding it back from rules being written because of the kind of crap he's doing now.
Well, let's ask our audience. Go ahead, Digital X. Why don't you just ask the audience to?
No, go ahead.
No, I'm saying that we're both going back and forth. Look, it comes off as Digital X is taking a certain standpoint, and I'm taking the other standpoint. Yes, we have opposite
standpoint.
Because we want engagement from everybody else, right? Because I happen to agree with what Digital X is saying. However, we have to provide a conversation. We have to facilitate this, right? So therefore, would you guys like to put some comments in our section and let us participate in this and take this to the masses? Because a lot of people should be aware. Number one, our listeners are aware now that, yes, we always talk about digital assets and the ecosystem evolving. However, there's always going to be bad actors, if you will, and I say that very loosely and carefully. There's going to be bad actors. I'm not pointing fingers. I'm just saying there are going to be. It's our responsibility in the Crypto Flywheel to bring it to light, So please share, engage, and we'll talk about it in subsequent episodes or right there in the comment section itself. Digital X, do you have anything further to add?
Oh, go ahead and flywheel out of here, Professor.
Yes, sir. So with that, this episode of the Crypto Flywheel is signing off. Thank you.
Thank you.